Hello and welcome to Crypto Weeklies. In this video, we are going to talk about SEI, conduct a regression-based analysis, estimated bull run target, and risk-based analysis for SEI. None of the content is financial advice. Let's get started. Over the last 7 days, SEI has rallied by about 16%. Over the last 24 hours, up by about 2.5%. The wider crypto sentiment is looking bad right now. Again, you can see the bull market completion got derailed from almost early in early December, when the completion was 60%. Now it's almost half of that, around 36%. The market has cooled off a lot. Again, this color coded analysis of the heat levels or the bull market completion is available under cryptoweeklies.com, and the link on the bottom of your screen under peak valley indicators. The purpose of this analysis is to identify when the market has overvalued or gotten overheated. You can see from the last time we were here was in, again, late November 2021, color coded in red color, or highest risk over here. The high risk environment between 60 to 80% risk we visited. 3 to 4 days we were here in December of 2024, and then prior to that it was way back in early 2022. The moderate risk, most of the 2024, at least towards the end of November and December of 2024 and early January 2025, we spent in that between 40 to 60% risk regimen. Now we are in the low risk time period again, since early 2024, early to mid 2024, and then back towards the entirety of February. We are in this low risk range between 20% and 40% risk, and lower than that is definitely towards the depths of the bear market, starting from May of 2022 till December 2022. Essentially, whenever risks are less than 5%, that's where again you'll find major bear market bottoms. Again, this takes into consideration price action of the top 100 cryptos and how they are doing with respect to the risk factors such as volatility, alpha, beta, Sharpe ratio, or risk adjusted return, and percent drawdown. So that helps to provide a holistic view of the market. Again, the risks have cooled off quite a bit. In terms of the sentiment analysis for the market, again, the sentiment is 50-50. Bullish and bearish, lot of bearish narratives, as well as equally some bullish narratives over the last 7 days or so. Again, overall the sentiment, again you can see the narratives which are bullish in nature were discussed a lot on social media platforms such as X and YouTube. Although there are some bearish narratives creeping up, again over the next few days you would find that the magnitude of this bearish narratives could eclipse the bullish narratives. Again, over the last 7 days or so, there has been a narrative related to a hack related to the Bybit exchange. That is one popular narrative. Good to see that all of these narratives are getting reflected in our narrative word cloud. Again, over here it's an automated machine learning based model trained personally based on what the crypto related content looks like across social media platforms, and what are some of the popular narratives. Based on the term frequency of these narratives, the popularity is determined, and the top narratives are selected for this narrative word cloud. Again, over here you can see the altcoin narrative has quite died down. Again, it's all Bitcoin, and its popularity relative to altcoin is high. Again, nonetheless, SEI being one of the altcoins, we will definitely cover its bullishness and bullish outlook that it has seen over the last 7 days or so, and its potential price action in the future with two models. The first is the simple moving average price based model, based on what the price is doing with respect to the 20-week simple moving average. You will find that the price color coded with respect to the risk levels, the warmer colors such as yellow, orange, and red signify high risk, whereas the cooler colors such as purple, blue, and green, again shades of blue and green, signify more low to moderate risk. Again, this model has dual utility. First is to identify the bottoms and avoid DCA at the tops, or dollar cost average at the tops. Again, if the hypothesis is only to dollar cost average when the risk levels are less than 20%, this model does allow you to select the days where the risk is less than 20%. Again, this is not some historically fitted model. This is a live model. You can find today's risk level at 14%, with respect to the 20-week simple moving average. Again, this is the second best time to accumulate SEI per this model. And if you look for forward looking guidance for the model, again right now the price of SEI is coming in at around 28 cents. Has about 46% of the total supply in circulation. So looking forward at from 28 cents, some of the moderate range of target, if the risk levels were to go back to 78%, to 60%, the price action could, at this point in time from this data that we have, at 60% risk, the price action could be at around 78 cents. These are some of the risk level based price predictions. So if the market allows a 80% risk, or this orange color again that say achieved during its early part of its journey in January of 2024, again this token has been around since about late 2023, but again this model takes into consideration the first print of the 20-week completion. So that's why we are getting the data since January, when essentially the 20 weeks are completed. The second model does cover the price action since inception, so that model has more data points. If we look at 80% risk, the price action or a peak for SEI could be at around 90 cents per this model. If we look at the DCA model, which takes into consideration the price since the launch in late 2023, August of 2023, the price did have a fluctuation during its launch. That this is the price with respect to the regression based valuation, fair value regression based analysis. This regression line is drawn using polynomial regression model to cover the non-linearity between price and time, especially for which is especially true for altcoins which do have a cyclical phase where the price goes up for a short time in the bull market and then has a downward bias. Right now per this model, the fair value is in an uptrend because the price was in an uptrend for almost 3 to 4 months in late 2024. The fair value per the estimation of the polynomial regression analysis is at around 40 cents. That means right now SEI is undervalued with respect to its fair value. Again you can see the risk levels, again the price color coded with the risk levels has again a dual utility. First, to identify the bottoms. So for example, the hypothesis being only to DCA when the risk levels are less than 10%. Again, today is one of those days. Again, day before yesterday was one of those days. Today it's slightly higher than 10% at around 12% risk at 28 cents price, and the fair value being at around 40 cents. If we were to extend this regression line, again this model does do some calculations. Again 6 months down the line, it's looking very bullish. But again, if we look at only 3 months into the future, again the fair value could be at around 61 cents or middle to end of April of 2025. And if we overlay this with let's say all of the risk levels first, and then we overlay the 2 standard deviation residual applied to this fair value to identify where the tops could be. Again you can see if we just zoom out and get rid of this future regression line, again you can see that when we apply the 2 standard deviation residual to the fair value, major peaks occur close to the dotted red line. Again close enough. There are some 3 standard deviation moves that the market makes, but that is at around 99.7 confidence level, or the price action only has about 0.3% chance to eclipse the 3 standard deviation, whereas with 2 standard deviation there is a 5% chance that the price eclipses or rallies beyond the dotted red line, which is good enough in a risk reward based holistic approach. Again, even if you miss the top by 5% with respect to the confidence level, you're essentially getting the trend or the maximum juice out of the moves using these kind of estimations. Right now the 2 standard deviation ceiling applied to the fair value, the price comes at around 72 cents. And if you look for this model for any further guidance, based on what risk levels could correspond to price actions, respective price actions, at 50%, if the price were to go to that 50% risk, that that corresponds to about 54 cents, and a moderate target between 54 cents to 74 cents, between 50% risk and 80% risk, and a top which again comes close to 80%, or at times at around 60 to between 60 to 80% risk, even at 2 standard deviation ceilings. That is because the eventual bull run, when it peaks in later half of 2025, that could correspond to a time-based risk level. There is a time-based component added to this analysis as well, and market cycle-based component to consider the 4-year market cycles. That one or the 100% risk level could correspond at this point in time price action between 77 cents and 87 cents. But if you look 6 months into the future again, not 6 months, 2 to 3 months into the future again, and ask for this to be at around later part of May to June, the 2 standard deviation ceiling is at around $1.65. So again, all things equal, the peak, if the regression shape of the regression function stays the same, that is the price justifies this upward trend, then the peak could be at around somewhere between $1 and $1.50 for say. With this, what we have is the third model is related to the time weighted average price, particularly helpful in the bear market accumulation. Wherever the price is trending below this blue line, which is the time weighted average price, signifies how much time price has spent at some of the key price levels, and takes an average of all of the price action to identify what is the average time weighted average price for the asset. This price is again coming close to the 42 cents, close to that fair value, and because the current price is below the time weighted average price, the risks identified are essentially zero. You can see that risk score over here. The risks are never zero, but this model likes to say that wherever the price trends below the blue line, the risks are zero. That is because to allow bear market accumulation. Again, the hypothesis is that this kind of analysis holds true only for assets which have a future, that is they have a rally in they have a likelihood of being participating in any further bullish rallies. So with that all in mind, that is if the underlying product is of high quality, accumulating below the time weighted average price eventually works out. If we look at an estimated bull run peak, again this is based on weighted risk based approach, and taking an average of all the risk level, the regression based risk at around 9%, time weighted average price as we saw 0 risk, 12% on the SMA based risk levels, weighted risk is around 7%, bull run peak based on the risk reward with 7% risk, 93% reward, estimated bull run peak at around $3.80. This is kind of one of the higher end of the predictions that we have for say represents a reward of about 13 or 14x from the current price of about 28 cents. Again, we might not get to this bullish peak that seems if there is no euphoria phase for altcoins, but if you divide this by 2 again at around $1.50, that's where you get confluence between this estimated bull run peak and the regression based model that we saw. With that, I'd like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.